Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 4th, 2024. I hope you guys and gals had a great, explosive week last week. You know, somebody gave me a hard time last week, saying that I was sounded too hyped up about last week. Look, we had an explosive week. Stocks rallied to all-time highs. The dollar was on both sides of a range, literally 3 different times over the course of 48 hours. The market has been volatile, and that was due to last week's mega dump of data. It was really a great week of trading. Hopefully you guys all participated in that. This week, I'm going to say that I'm not expecting as volatile of a week in the market, but that doesn't mean that we won't get volatility, and there's no better place to be than with Forex Analytics. I'm going to give you an example really quick. And, let me just say, if you want to try out Forex Analytics, it's $1 for 10 days. Download the mobile app. You get all this analysis. You get all these tools like all the analysis on 30 different products, 30 different instruments. You have the data flash. You have live squawk feeds. So you get news headlines as they're coming out, as they're being released. You have patterns in play. Those are ideas that are by the book that we see. And check out our chat room. I'm going to give you an example of this is Friday in our chat room. So you can kind of see, this is where I said good morning on Friday. And you can just see all of the ideas, the chatting, the charts, people talking about trade ideas, different news headlines, things that are moving in the market. They're all happening right here in our community. And you can still see people are saying good morning, Friday morning. This goes on and on and on and on and on throughout the course of the day. So if you want people to talk to that have trade ideas, that are like-minded like you, jump in our community. I'm still going. That was only 2 hours later, right? You can see how active. This is just the general chat room. Then check out the newsroom, the trades room, where we actually, tell you where we're buying and selling things. And I give you a running total of trades that I'm in and when I'm getting in and getting out. Yeah, guys, if you want to be part of the most active trading community, jump into forexanalytics.com. That's with an X. Okay. Enough about that. Let's get into the markets and let's get into, some of the charts. And, you can do live charting here in Forex Analytics, and then you can do Elliott wave analysis, harmonic analysis, basic technical analysis, macro analysis of whatever you want to see. But I'm going to actually go to our live charts that we use each and every week here on the week ahead video. And we're going to talk about what we have going on this week. So remember, I do give you my best trade setups and I review last week's setups at the end of the video. So if you want to fast forward and skip throughout everything that's happening this week, feel free to do that. But just remember, go to the very end and then don't forget to give us a thumbs up. Subscribe to the channel down below. Hit the bell icon. That bell icon will give you a mobile notification or desktop notification whenever we release a new video. So make sure, and here at Forex Analytics, so make sure you do that. All right, let's talk about what's happening this next week. So next week, we have a couple big banks that are central banks that are meeting. We have the RBA and the Norges Central Bank. We still have earnings. There's a lot of earnings last week, and I want to show you actually a couple of charts. You talk about an explosive week last week in earnings. Oh my gosh. It was explosive. And, take a look at stocks like Amazon breaking out to the upside. But we have earnings from McDonald's, Caterpillar, Baba, Disney, Amgen, bunch of pharmaceutical giants. But check out last week, Amazon breaking out to the upside. Meta up 20 some odd % to the upside. Apple even hit its trendline support and reversed and bounced back above the 200 DMA. Microsoft surging at all-time highs. Google trying to recover after earnings is really the only big, well, there's a few big tech stocks, but this one was that didn't do well. But look at Nvidia breaking out all-time highs. Guys, these are breakouts. The market's on fire right now. And you have to admit that it's breaking out. I didn't think it was going to break out, but it is. Just because it is, you should be respectful of that, right? Right. But we will go into the charts of the major indices. You can skip through the chapters if you want to see those. But anyway, we still have big earnings this week. But let's talk about, let's just start off with Sunday night. So Sunday night, we were notified via social media. Nick Timmeros, he reported that Fed Chair Powell will have a 60 minutes interview on Sunday night. I'm sure he probably wants to clarify a few things about the Federal Reserve meeting this week, which it's interesting. He came out way more hawkish than expected. The market thought about it for literally a half a day, and then we ripped again to new highs. So, whether he continues to push back, talk about inflation, how it might be sticky, I'm not sure. But when it's an interview format like this, he's going to tell you exactly what he wants you and I to hear, and it's going to be in a long format. So we're going to get a lot of information. So Sunday night, Monday morning if you're in Asia, but Sunday night, be on the lookout for that 60 minutes televised interview that's going to be here in the U.S. with Fed Chair Powell. Other news that's happening on Sunday night, we have Chinese private sector CACs and PMIs. Those will be out Monday. Now I'm going to go to the dollar really quick, and I want to talk a little bit about the dollar index. Let me pull my face off of these charts. Let's go over to the week ahead charts, the charts that I use here. Now you guys know, because I explain this to you each and every week. The dollar index chart is a chart that I use universally for not only the week ahead, but I use it on the daily roundup, the morning edge, the F.A.C.E shows, and those are our free shows. By the way, if you want to know how to get to our free shows every day, you can go to the Flow Show, which is hosted by Ryan Littlestone, and it has K-Man joining Ryan every day. Then you have the F.A.C.E show, which is myself, other team members like Ryan and K-Man and Dale Pinkert, and Dale does an interview of a market expert not in the Forex Analytix in our staff, and he interviews some of the top minds in the financial markets. So make sure you guys and gals are listening into those two free shows each and every day. But on Monday, as we, going back to what's happening on Monday, we have the ISM data. Now it's the services data. It's going to be a real important piece of information for the market because the ISM is still, the last reading came in at 52, which is in 50s boom bust territory. So if it continues to stay above 50, especially if it's, maybe towards the 51 level, it means that, it may have come off a little bit, but it's still expansionary. When you have that in a services sector economy, any dip that you see in risk is going to be bought. And even if the dollar sells off because the data is a little light on Monday morning, the dollar is probably going to get scooped up again, because the U.S. economy is really making a lot of economists look silly. There has been so much negative analysis about the U.S. economy over the course of the last year and a half. The fact that the U.S. economy is still showing signs of strength at this stage in the game, it's something that we have to continue to respect. Now, it doesn't mean that the data can't start turning sour from this point forward, but as of right now, you see the services sector, it's supposed to come out at 50. It's still in expansive territory. So with that being said, dollar will still be supported more than likely. You'll notice that this dollar index, like I said, we've been on all sides of this range, but we closed at the upper end of its range and at the 50% retracement. If the dollar index breaks above 104, we should complete the inverted head and shoulder pattern. That inverted head and shoulder pattern completes, around the 105 level. But we also have big resistance zone coming in. You can see that gray level. And like I said, I've been very bullish the dollar, and it's hard to be bearish right now. And we closed above the 200 DMA, closed near the highs of the week. Looks like we're going to expand towards 105. You give us a strong ISM number on Monday, it's going to make that process just a little bit easier. All right, continuing on, Monday night. Now, we do have the RBA decision. And for those of you that think the RBA means, the Royal Australian Bank, it's not. It's the Reserve Bank of Australia, not the Royal Bank of Australia. I had somebody say that to me this week, and I'm like, what? No, it's the Reserve Bank of Australia. Anyway, you see last week we talked about selling the Aussie on any approach to 66, 66.50. You know what the high was this last week? What was that? You can see that the highs were 66, 25, 24, right around here. 66, 24. So we got pretty damn close. We got close to where my drawing was from last week, and we rolled over really hard at the end of the week. Now, the scary thing about the Aussie, let me delete this really quick. I'm going to do a little work with you. This is a conversation that I've had with the Forex Analytics community, the private community, not the free shows all the time. The public, not the public shows all the time, the free shows. I said, hey, listen, if we break this level here, let me grab this black line. You can see that right there, right? We break this level, which is 66.25. There's major support down below, which is a long-term 618 retracement. Whoops, didn't want to do that. A little 618 retracement right here that comes in right around 65 cents. We basically closed on it. The dangerous thing is if this level breaks, especially Monday night, okay, and the RBA not only has a sorry, I hit the mic, has a meeting, but then a press conference an hour later, which is going to be more of the focus because no one's expecting the RBA to actually move on rates. But the most important thing is going to be Michelle Bullock, and if she's turning a little bit more dovish. Remember, last year she was pretty damn hawkish. But, you think about where China's at, struggles that China has, and how that affects the Australian economy, not only Australian, but also New Zealand. If Michelle Bullock is dovish, we break 65 cents. It seems like a very, very easy, elevator ride down to 64 cents. That seems very easy to do, especially with a dovish RBA. So for those of you that, and it's kind of late at night, by the way, that's 8:30, 9:30 my time, which is what, 10:30 and 11:30 Eastern. So, if you can be in front of the computer, you have some Australian exposure, it's going to be worth being there. For me, I'm going to be up and awake inside the Forex Analytics community, chatting with everybody about the RBA. So make sure you're around in Asian trade that night. Okay, continuing on. So after the RBA decision on Tuesday, we have the Canadian IVPMI. Now, I'm not going to look at the Canadian too much at this moment because we have Canadian employment at the end of the week on Friday. So I'm going to come back to Canadian, but we also have that same day we have Macklem. He's speaking about monetary policy a little bit later. But man, we got a lot of Fed. We have a lot of Fed governors that are speaking throughout the course of this next week, and not a lot of European data. So that's going to free me up to take a little bit of a look at the euro dollar. Now, starting with Tuesday at noon Eastern, we have Mester. What's her first name? Loretta? I believe it's Loretta, if I'm not mistaken. If it's not Loretta, sorry. Anyway, she's a voter. She speaks on Tuesday. Let me give you a list of just a couple of speakers that are happening this week. I think from what I read, there was like 12 different speeches or 12 different Fed speakers this week. But I know for a fact, Tuesday we have Mester. We have on Wednesday we have Kugler. She's a voter. We have Barkin. He's speaking Wednesday, and he is a voter, obviously. And then we have Barkin speaking again twice on Thursday. And then there's other Fed governors, a lot of them that are non-voters that are speaking throughout the course of the week. But it's going to be really important to hear now that we've gotten past the FOMC. Now you're past the quiet period, so all of these Fed governors, regional Fed governors, are going to speak their mind and give you their opinions. There's going to be a lot of headlines throughout the course of this next week, so just keep that in mind. Okay, continuing on. So Mester, she's speaking on Tuesday, and just keep an eye on the dollar. Not only just the dollar, but look at the euro. We have this this head and shoulder pattern. The head and shoulder pattern, depending on where the neckline takes us, still takes us all the way down to 106.30, somewhere down there. Now, we do have a 618 retracement that's going to come in right around 107. I think it's going to be tough to get from the 107 to lower 106s to complete that head and shoulder pattern. I think it's already very choppy. But what you're going to notice about these technical levels, in this case, I'll just draw it out for you. So what you're seeing here is you're seeing a range. One of the best trading strategies when you have ranges that are tight like this is what's called a range expansion. So when you break out of a range, and you could argue that on Friday we were threatening, if not breaking out of the range. When you get a range like this that's really tight, it's kind of like a coiled spring. You take a spring, coil it, and you keep it coiled for a while. Your fingers start to get tired, right? Your fingers like, gosh, it's tiring holding that spring. Then you're like, okay, enough's enough. And you let go, and the spring was gonna, it's gonna boing one direction or the other. Usually what happens is you get a range expansion. So if you get a range expansion, you go something like this, right? You take this range and you go whoop, range like that. That's where you're going to the upside. Or in the downside, for example, you have this range, you break down, and then voila, we complete a head and shoulder pattern. So what I'm trying to tell you is if we really start breaking down in the euro, that means the dollar rallies. That means that that range expansion is probably going to complete the head and shoulder pattern. And again, we have all these voters that are speaking this week. How are they looking at this U.S. data that's being released, and how are they supposed to, with a straight face, be really dovish? I know some of you are at home, you're thinking this, those numbers aren't real, Blake. It's all rigged. I know people. This economy is, just not what they say it is. True, not true. Your opinion matters, don't matter. Up to you. But to the market is trading what we have. And what we have right now, undeniably, it's pretty good data, at least for today. Will it change this week? Possible. But for right now, the data is strong and markets are responding to that. So you can have your opinions. Look, I have a lot of opinions. I don't always voice them here. I tend to voice them in our private communities when I'm talking to Forex Analytix traders and we're talking amongst ourselves. I'll voice a lot more of opinions then. But just because my opinion is my opinion doesn't make it fact. It's just an opinion. What's factual is this data that we receive, whether you believe it or not, the market is responding to it. And as a trader, you have to respect that because the rest of the market is. Or you can continue to think that you're smarter than the markets, but that's usually one of the biggest downfalls of traders when they first start and their first, several years in the markets. They think they can outsmart the markets. But remember, the market takes that data, processes it, reacts, and we have to be reactive to it. Okay, I'm going to get off my soapbox here. Let's talk a little bit more about what's happening this week. So, like I said, on Wednesday, Tuesday night. Let's go to Tuesday night. So Tuesday night, we have New Zealand employment. Now, the New Zealand employment data, it's really going to be important because the Kiwi is probing really important support. Unemployment is supposed to tick up to 4.3%, or I'm sorry, 4.3% from 3.9%. And, that's a pretty big jump in expectations. So what that does is that makes the Kiwi dollar extremely vulnerable because I don't know if you guys can just eyeball and see it, but I'll just show it to you, because looking at this, I eyeball it and I see this. Do you see this? I mean, you talk about the direction of the Kiwi. I mean, you get a breakdown. Think about that from a trade perspective. You short the Kiwi here, you put your stop somewhere here, and then you're targeting somewhere down here. So you have a risk-reward ratio of, what is this? $1 to what? Maybe $3 or $4, $5? It's a good risk-reward on a weak piece of data that potentially could come Tuesday night here in the U.S., Wednesday morning in New Zealand. Especially if you watch how the Aussie's reacting, because if the Aussie's already breaking down the day before because the RBA, the Kiwi is going to be coming down too. Because most people are going to make the assumption that, well, if the RBA is really dovish here, the RBNZ is probably going to be dovish too. So if the Aussie comes down on Tuesday night or Monday night because of the RBA decision, then the Kiwi's probably getting drugged down as well. And what could further accelerate losses in the Kiwi dollar would be a weak New Zealand Tuesday night or Wednesday morning. Okay, continuing on with Wednesday. Wednesday, we like I said, we have some Fed members. We have Kugler. She's speaking. I already mentioned that. Tom Barkin, he's speaking like an hour and a half later. We also have a 10-year auction. So let's take a look at the 10-year really quick. So, we were looking at this bull flag pattern in the 10-year. Now, I was expecting a breakout, but we stopped right at resistance. And on Friday, we got a really big reversal following the non-farm payroll. If those auctions come in a little light, by the way, we have a 10-year on Wednesday. We have a 30-year on Thursday. Come in a little light. Next thing you know, the 10-year, or kind of a weak auction, if you will, 10-year is going to be trading below the 200 DMA. And now you're going to have a big double top setting up. Another one of the great trade strategies, if you will, is a double top or double bottom. So when you have a double top, for example, this would suggest a move like down to the 618 retracement, maybe slightly lower on the 10-year. Where does that put 10-year yields? Well, that's when you start looking at 10-year yields targeting up here around the 4.5 level. And if we get to 4.5 in the 10-year yields, because of these auctions, because the dollar is rallying, that's just going to further the fuel of the fire of the dollar. So if you are a dollar bear and 10-year yields are ripping like that, and you get a double top in the 10-year notes market, you're probably going to get run over if you're short the dollar. I'm just saying, okay? Continuing on. Hey, wait, before I continue on, if you think that these videos are valuable to you each and every week, me walking you through every step of the market throughout the course of the week, give me a thumbs up. Specifically, jump down in the comments below. Maybe if I missed something, let me know. Maybe tell our staff and the guys and gals behind the scenes that are posting these videos, doing the editing, doing the artwork every single week, tell them they're doing a great job. Give them a thumbs up. You don't even have to give me a thumbs up. Also, while you're doing that, make sure you check out the trader funding program. It's great. When we get new traders that are getting funded, it's awesome. It's awesome. If you don't have access to larger trading accounts, or you just don't want to risk your own money in this volatile environment when the dollar flips around back and forth, check out the trader funding program. It's such a great option for traders that really just don't have the means to trade larger amounts of capital. So check it out, trader funding program. You can find it right on our website. All right, continuing on. let's go into Thursday. Okay, so Thursday, again, barking speaking, we have U.S. unemployment claims. Now, unemployment claims, they did dip, and I'll just stay here on the 10-year really quick. They did dip, a couple weeks back below 200,000. They're back above 200K. That's like we had 224,000 this last week. It's kind of the thing right now that when I look at the labor market, I'm watching very carefully because, if we start to unexpectedly see those unemployment claims starting to rise, I do believe this labor market is, even though the data looks good, the data that we're all getting that some of you just don't believe in, I do believe, me personally, here's an opinion, I do believe that the jobs that we are creating here in the U.S. are not white-collar jobs. They're blue-collar jobs. But they're jobs nonetheless. Some people that may have had a great engineering job a couple years ago or a year ago that got laid off might have picked up 2 other jobs. Hence, not bad-looking economic data. But we got to watch those unemployment claims because if they start ticking up and the jobs market starts to turn sour, it's that sentiment that could really turn quickly. And you'll see it first really in unemployment claims. Unemployment claims is pretty much the most real-time data that we get every week consistently. While the U.S. is paying its bills anyway, we get that data consistently every week that can give us that slight variable where we start to go, hey, wait, radar goes up. We need to start paying attention. So unemployment claims that are important, yeah, they're Thursday. And then on Thursday, remember, we have a 30-year bond auction as well. There is something else that's happening on Thursday, and I forgot to mention it, but I'm going to mention it right now because, there's actually a couple of things that are happening that I just failed to mention. And so you have to excuse me for a second. I forgot to mention that on Thursday, we have Mexican inflation data, and we also have an interest rate decision. So I am glad that I stopped here to think about that. Now, one of our review trades from last week was we're going to buy the dollar MEX on a breakout above the 200 DMA. It hasn't broken the 200 DMA yet. I still expect it to. So there's that. And I'll come back to that when I go into the review. But we do have an interest rate decision. Now, the Banxico is not expected to did I say Norges Central Bank earlier? I did. I meant Banxico. Norges Central Bank isn't meeting this week, unless I'm mistaken about that. No, they have inflation data this week. That's right. Okay. So if I did make a mistake earlier, so I'm making the correction now. It is not the Norges Central Bank. It is Banxico that is making a decision on interest rates this week. And I'm going to see if I can get our editor to type that in. Anyway, Banxico, even though they're expected not to make a decision on rates, they might be a little bit more dovish. Remember, there are some of the LATAM central banks that are really starting to lower rates already. And Banxico, we have to just keep in mind that they could be a little bit more dovish. Now, one of the other things that's happening on Thursday morning is we do get inflation data out of Banxico as well. But I want to point something out. And while we're here, if you look at the dollar MEX, and let me delete this. I'm going to come back and draw this again here in just a second. But if you look at let's add really quick the S&P. And what you're going to notice is there's a huge inverse relationship between the stock market or risk in general and emerging market currencies. And what happens is when stocks go up, emerging market currencies go higher. That means the dollar Mexican peso would go down. What you're going to notice is really since here, which is about this whole year, about December or so of last year and into the beginning of this year, what you're going to see is you see stocks continue to rally, but do you notice that the dollar Mexican peso is stopping and not going down anymore? That's a risk. And that's one of the reasons why I'm very, very bullish the US dollar Mexican peso. And I'll tell you that again during the setups review. But I'm just saying that, if Banxico comes in dovish, maybe they unexpectedly cut rates, which I don't think is going to happen. But if they come in dovish, $MX could really take off. Okay. So anyway, just some food for thought. Again, that's happening on Thursday. I do want to mention though, since we don't have the Norges Central Bank on let me delete these things really quick. Let me change that. On Friday morning, we do have the Norges Central Bank. Now, the US dollar Norwegian krona is going to pop up here in a few minutes, but I just want to point out that it has broken horizontal resistance. We're at the 200 DMA. We are expecting a break higher. It's happening. Okay, that's going to be on Friday morning, and then also Friday morning. Probably the big event for Friday is going to be the Canadian employment report. Now, remember, we do have earlier in that week Ivy PMIs, the Bank of Canada's Macklem speaking about monetary policy on Tuesday. So earlier in the week, we might get some volatility. But notice how the dollar Canadian is still holding up on that 134 level. That 134 level remains. I'm gonna use in the phrase that our very own Paul Franco would say. That 134 level is holding like the Rock of Gibraltar, is what he would say. But, if you look at it from a technical point of view, after completing the ABCD pattern, we basically have a bull flag pattern. You guys see that? So you have a bull flag pattern that is a risk of a continuation now. So if we get much above the 200-day and especially above the 135.50, that just opens a lot of upside. So if the Canadian employment data is weaker than expected come Friday, there's a good chance that we're going to be, staging a really big breakout in the dollar Canadian. And this is going to add fuel to the fire since the dollar, the Canadian dollar and the dollar index probably adds or is about 8% or so. Some of you would know the numbers better than me. 7 or 8% of the genetic makeup of the dollar index. Euro being the most at like 57% or something like that. The dollar Canadian could be already breaking out if the dollar continues its breakout that it looks like it's going to do. So anyway, now that's going to wrap us up for the week. And this is the point where I'm going to talk about, some of the other markets really fast. And then I'm going to go into the review portion of this video. So first, let's take a look at gold. Gold is vulnerable. It's still struggling at 2070, but what's more vulnerable is silver. Silver can't get out of its own way, and silver remains very heavy too. We really need to start focusing. I know I've mentioned this to you probably every week, but that false breakout is going to eventually lead to a breakdown. And you'll notice how silver is trading heavier than gold. So what we have to start being very, very cognizant of is how silver reacts on a move to 2150. Now, gold, obviously, struggling once again at the 2070 multi-high level high, that triple top that everybody was looking at. Even last week, we rejected it and came right back down again. So now if gold, breaks below 2000, I think 2000 is where it starts to open up some downside. Okay, so just watch gold, especially if the dollar's rallying. Other thing we need to look at, the S&P. Now, I had talked last couple of weeks of the S&P hitting the 161% extension and reversing. We've obviously discussed that quite a bit. From a technical point of view, you have divergent relative strength, which you still do. You have completed an ABCD move. We could argue, right? This week, we went above that 161% extension. You could argue that we closed at it. But I also have to say that, I pointed out all these stocks a little earlier. The market still looks bullish, and you can't jump on a rooftop and yell at the top of your lungs, I am bearish stocks right here, right now. You can't really do that while we're in breakout territory. I mean, you can, but you can see last week we came down to the breakout point, right? We came down to those previous highs. We came within like 10 points of that breakout point. and then we bounced. So with that being said, you have to be respectful of the fact that we're still breaking out. Yes, relative strength is divergent. Yes, all the data that we're getting is probably fictitious. Yes, the earnings are companies are still doing pretty well, and you see that stocks continue to bounce back. Yes, stocks that get sold off continue to rally back. Yes, you have to respect all that, right? So I am, and even though I'm still a little cautious up here, I'm not going to ignore the fact that the market is still in breakout territory. All right. But that's the S&P. Like I said, I'm gonna continue on real quick. We should probably look at Bitcoin. One of the things about Bitcoin is we're really struggling to make highs here. I mean, like we've recovered because stocks have recovered, but man, watch this Bitcoin. I think that Bitcoin still is at risk of coming down to the support zone that you see right over here. So I would still be looking to pick up longer term Bitcoin if we can make it down there. But you see there's a little head and shoulder pattern might be developing as well. All right. This is where I'm going to talk about our best setups from this last week. Okay. So last week I said, dollar Mexican peso, buy it above the 200 DMA. Well, maybe I happen to be a week early. And I still don't think you give up on this one. I still think that a break above 1740 is going to be very bullish for the dollar mex. So has it happened yet? No. So we're just going to call that a scratch. Crude. Last week I was looking for crude to reach for 81.40. Do you know what happened? It didn't get there. So let me show you what happened with crude. So crude oil rallied above the 200 DMA because this is where we're at the end of last week. And I'm like, okay, this thing's probably going to break horizontal resistance and take off, right? We're going to be able to take these levels out. Well, what we couldn't do is we couldn't take those levels out. And then at the end of the week, we started to see a reversal. Now, why did we see a reversal? Because there was a potential, if not, ceasefire in Gaza with Israel and Hamas and everything. Now, I know some of you live in that region and you're probably going to argue otherwise, but the market basically reversed after that point. But to my, even though I was wrong about that, to my defense, what you're going to see is the crude oil, I closed it at 75.71 because of that reversal from that news. So with that being said, we saw a continued sell-off, and I think crude does look a little vulnerable at this point. Then the last setup was long vol, possible move above the 200 DMA. Now, long vol meaning long volatility. And we have not made it above the 200 DMA. Last week, we closed right here, and we closed higher than that this week. So you can call it a win, but I still believe that we can make it a move above the 200 DMA. So did we make it above the 200 DMA yet? No, not yet, but I wouldn't give up on that one. As you can see, we're making higher highs and higher lows, which that overall is an argument for a potential trend change in the market. So while we continue to make higher highs and higher lows, I think it's a risk is building for a move above the 200 DMA. All right, so I'm going to give you my quick setups for this week. This week, I am looking for a breakout of the US dollar Norwegian krona. Now, we do have inflation data at the end of the week. Remember, on Friday, we have CPI and PPI out of the Norges Central Bank, or out of Norway. And then also with crude oil weakening, this breakout could really continue to get some legs. So for me, looks like we're breaking out above the 200-day moving average. You just look to be long US dollar Norwegian krona and probably move back up towards 11. Now, I'm going to also say this really quick. When we've seen what we've seen in the US dollar Norwegian krona has been pretty staggering, I would say, in my view. We've held up a lot better than I think a lot of people expected. And what you're going to notice here is we have this channel that's kind of developed. So if you are trading the US dollar Norwegian krona, which I think is a very, very good currency pair to trade, break of the 200 DMA should open us up towards 11. All right, next setup. dollar yen. Now, here's the thing. Dollar yen's kind of been off my radar for the last few weeks. Ooh, I didn't want to do that. I'm going to zoom in a little bit with this dollar yen. The dollar yen's just been kind of sideways. What you're going to notice is we have this bull flag pattern. Okay. Now, I don't like to ignore bull flag patterns all that often, but in this case, I think I'm going to. Now, I'm going to tell you why. Why I think that we're going to rally, and it looks like a breakout, and then we're going to end up having a failure around the 150 level. Now, I think we fail somewhere up here around the 78% retracement or the 88% retracement. So basically around the 150 level. This is where I think we fail. Why do I think that? Well, the reason why I think that is that that if you notice with central banks right now, all these central banks are going, hey, wait a second, we're not ready to cut rates just yet. You're getting pushback from the ECB. You're getting pushback from the Fed this last week. And this opens up the opportunity for the BOJ, if they really want to, start shifting policy more to a neutral stance and continuing to tinker with YCC. This is a great opportunity for them to do so. What you're going to see, or what we're seeing here, is central banks are more hesitant to cut rates. So that gives the Bank of Japan a little bit more room to be more hawkish. So I think that any move towards 150 or maybe slightly above 150 is going to find sellers. Last but not least, my third setup this week is going to be the Euro-Aussie. The Euro-Aussie is, we're developing a bull flag pattern, and I think the risk is, and by the way, I'm already long some Euro-Aussie, but that doesn't matter because I think this is going to set up for a good continuation if we can break above channel resistance. So why do I want to do that? Well, you got the RBA decision this week, and you have very little European data coming out this week. So if the RBA ends up being dovish and way more than we expected, then the Euro-Aussie is at risk of breaking higher quite aggressively. So those are going to be my three setups for the week. I hope you guys and gals have enjoyed this video. If you have, make sure you give me a thumbs up. If I forgot something, or if I made a mistake like I did earlier with the Nordic Central Bank versus Banxico, I meant to say Banxico. You probably already jumped down in the comments and made some comments. That's great. I appreciate that. And I want to also say thanks for spending your time with me. I know your time is very valuable to you. It's the weekend. And it means a lot to me that you watch these videos. So thank you. I appreciate your support, and all of us here at the Forex Analytics community appreciate your support as well, for helping us, build one of the best trading communities in the world. So thank you. Have a great remainder of your weekend. I'll see you Monday morning on the F.A.C.E show. We'll see you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.